Hi there, you're watching Buy Now Sell Now on ET Now with me Shreyanshi Singh and Cheryl D'Souza, and over the next 1 hour we'll get all of your stock related queries answered from both the technical as well as a fundamental perspective. But well, first things first, we've got to take a look at the markets, and it's quite the sea of red there.
Absolutely, Shreyanshi. A very good morning to you. Happy New Year to you, because we are meeting each other.
And absolutely welcome back, Cheryl.
So happy New Year to all of our viewers, because I have not been able to wish you all of you. But yes, if you look at the markets, sea of red, that's exactly how it is looking like at this point in time, because if you look at the Nifty now near the day's lowest point, advanced decline ratio very much tilted in the favor of declines as we speak. Nifty Bank underperforming the benchmark indices with a cut of about 1%. But if you look at Reliance Industries, that is the top gainer on the Nifty despite of almost 2% up move coming in for Reliance Industry. You're not seeing that sort of an effect on the Nifty levels. If you didn't have Reliance Industries actually participate, then I believe the index would be at much lower level at this point in time. A couple of brokerage reports actually aiding the move for Reliance Industries. You have Dr. Reddy's, ONGC, BPCL among the other set of gainers, while on the flip side, this trend seeing cuts of about 3%. Shriram Finance is down 2.5%. You have Adani Ports down 2%. Titan, Infosys are the other set of losers in trade today. Let's take a look at what the sectoral indices are looking like at this point in time, because you have only BSE oil and gas sector that's in the positive territory. Otherwise, all the sectors in the negative territory, with the realty index being the top sectoral loser, followed by IT, as well as the broader markets aren't participating at this point in time, Shreyanshi.
Well, absolutely, and that's the market picture and what it is looking like now. But with that, let's kickstart the show and let's kickstart taking all of your stock-related queries. But before we do that, let's take stock of the number that you can write to us at, that will soon be flashing on the top of your screens and on your screens. There you have it. You can write to us with your buy price for the stocks that you're already invested in, and for the stocks that you're planning to invest in, do mention the time horizon that you then have in mind. And on the show today, then we have Kunal Bothra, as well as Shahina Mukaddam, who's an independent analyst, joining us as well. Good morning to you. The first query, in fact, before I take the first query, in fact, I just wanted to take your take on the IT space, Kunal. What do you make of the current moves that we've been seeing?
So good morning. First of all, I think the IT space somehow has been more of a resilient space. The indices and stocks within the IT pack, they've they've done fairly well for themselves over the last 3 months, 6 months, as well as over the last 2 years. But somehow on the short-term charts, and I'm talking of it from a very recent point of view, that there are evidences that many of these large cap IT names, they are showing some signs of corrective phases. In fact, the IT index for the first time, I think, it's made a bearish head and shoulder pattern. Now that could probably indicate that maybe over the near term, you might probably expect that the IT stocks and the IT index could probably go into a mild corrective phase. So I believe that the longer term structure is very strong, extremely positive. You've seen the mid cap IT stocks do fairly well for themselves, but it's just that the near term structure for many of these IT stocks, larger cap names, as well as the IT index as such, is showing some signs of sluggishness. So maybe from a short term view, you might probably expect these indices to correct by a margin of another 2 to 5% at least over the very short term.
Alright, so that's a short-term view coming in for the IT index. Very good morning to you, Kunal. Good morning to you as well, Shaheen. I just want your quick take coming in for the IT space and what you're actually penciling in, because you will have all the numbers stricken in very, very soon. So what's your take for the IT index?
Well, I think the growth is expected to be extremely subdued on a CC level. For the full year, we're expecting the growth to be maintained around 8 to 10% in the higher single digit for overall average IT companies. This quarter we are not expecting too much in terms of actual numbers, but there are certain positives that we can look forward to in terms of the commentary of the managements going forward, because as you know, interest rates in US are coming off, and IT spends are likely to increase given the fact that with the new Trump administration, there could be more money in the hands of large corporates to invest in actually their systems. So to that extent, I think both services, IT services, as well as other research-based, smaller mid-cap IT companies should do well over the longer term. So I would think this is a consolidation phase. The IT sector has done pretty well if you see the last quarter in terms of stock performance. So we are seeing a bit of corrective move. And I think that could continue on for maybe the next month or two.
If you like this video, then like, share and subscribe to ET Now.